What do AI, iPhones, fighter jets, and Bitcoin mining rigs all rely on? Chips. And behind nearly every cutting-edge chip is one company, a Dutch firm that doesn't just make machines, it makes the only machines that matter in the chip race. Meet ASML Holding, a silent superpower in global technology, and the sole maker of machines so complex they cost more than private jets. Overview. Let's break this down super simply. Imagine you're trying to draw the tiniest, most detailed image ever. So small it's invisible to the human eye. Now imagine you're doing that millions of times in a second, onto a piece of silicon the size of your fingernail. That is basically what ASML's machines do. ASML makes high-tech machines that print tiny circuits onto computer chips. And those chips, they are literally in everything. Phones, laptops, cars, game consoles, AI data centers, even military jets. But here's the crazy part. There's a special way of printing these advanced chips. Call it EUV, lithography. And ASML is the only company in the world that can do it. So ASML has 100% market share. They sell these EUV machines to the biggest tech companies on earth, like Apple, Nvidia, Intel, Samsung, AMD. Each machine costs more than a private jet, over 200 million, and it takes years to build. So why can't anybody else make them? Because ASML spent decades perfecting the tech. The machines have over 100,000 plus parts, come from 40 plus countries, and they shoot the most powerful light beams ever used in manufacturing. And here's why investors love it. ASML has a monopoly. No one else can compete. They sell fewer machines but make billions doing it. So in simple terms, ASML builds the printers for the digital age. Every advanced chip starts with one of their machines. No ASML, no AI, no phones, no future tech. Financials. Now let's look into ASML's financials. Forward EPS is around 27.5, forward PE ratio is around 29, dividend is around $7, yielding around 0.9%. Market cap is a staggering $310 billion. 1-year returns are around minus 25%, and 5-year returns are around 100%, and 10-year returns are a massive 680%. Over the last decade, revenue per share has been on a rocket ship, from around $11 in 2012 to $78 today. That's over 600% growth. EPS has shown strong growth too for over a decade, with only a slight dip in 2024. And like all great compounders, its margins are elite and returns on capital are strong. ROIC is already hovering around 40%, with other returns metrics also sitting in the elite 40 to 70% range. These machines aren't just expensive, they are extremely profitable. In fact, ASML's profit margins hover around 30%, and it converts a massive portion of that into free cash flow. And those dividends, they have been steadily growing, quietly rewarding long-term shareholders. ASML only pays around 20% of its earnings as dividends, which makes perfect sense when you're earning such a high return on invested capital. But that's enough praise for ASML. Let's shift gears and take a look at what the future holds, including the key risks and opportunities ahead. Future. So what's next for ASML? Let's start with the opportunities. The AI boom is pushing chip demand into overdrive. Governments from the US to China are pouring billions into local chip productions, almost all which rely on ASML's tools. And the tech roadmap for ASML isn't slowing. 3nm today and 2nm tomorrow. ASML is already testing a high-NA EUV, the next frontier. But with great power comes great risks. Geopolitics. The US has restricted ASML from selling its top machines to China. That cuts off a key customer, but also raises their value elsewhere. Customer concentration. TSMC, Samsung, and Intel drive most of their revenue. Any slowdown in CapEx and ASM feels it. Cyclicality. The semiconductor industry is famously boom and bust. Even ASML isn't immune. Just look at the recent year. The stock is down around -30% in the last 12 months. When researching this company, I realized that there's one key risk that I really don't like. It's the unknown. Let's be real. Most of us have no idea how ASML's EUV machines actually work. We kinda get it. The same way a kid understands where babies come from. Lasers get fired, chips get made, magic happens. Even Warren Buffett famously avoids companies he doesn't fully understand. So here's the question. Do we really need to know how ASML does it? Or is it enough to know that they are the only ones who can? The risk? Because we don't truly grasp the technology. We don't know what could replace it, disrupt it, or make it obsolete. If a better method comes along, would we even see it coming? That uncertainty, yeah, it makes me nervous. Still, with its large moat, tech leadership, and demand tailwinds, ASML looks poised to thrive in the long term. Intrinsic value. Now let's try to estimate the buying price. ASML's forward EPS is around 27.4, and the analysts are projecting strong growth ahead, ranging anywhere from 13% to as high as 36%. Personally, I do believe ASML will continue to grow rapidly, but I'm skeptical that growth above 20% can be sustained long term. So for a more conservative estimate, I'm assuming 15% annual growth for the next 5 years, followed by 12% for the next 5 years after that. Historically, ASML's PE ratio has been all over the place, ranging from lows around 24 to high near 60, with the long-term average landing somewhere between 30 to 40. The current forward PE ratio is around 29, which feels reasonable, and I'd expect it to trade at least in that range over the next decade. And as always, I'm aiming for a 12% return on my investment. With those inputs, we can now estimate the stock's intrinsic value to be around $1,200. Here you can also see other returns on different prices. Even with worse estimated growth numbers, the stock is still undervalued. ASML is not your average company. It's quiet, it doesn't advertise, but it powers everything. From your iPhone to the data centers running AI and maybe even your car in the next few years. It holds a near monopoly in one of the most critical technologies of our time. With insane pricing power, decades of head start, and machines no one else on Earth can replicate. That kind of quality almost never trades at a discount. But right now, based on my analysis, ASML looks undervalued. If you're a long-term investor betting on the future of tech, this might be one of those rare opportunities worth grabbing. Still, I cannot shake one thing. We don't, or at least I don't fully understand the tech behind these machines. And that means we don't know what could disrupt them, replace them, or render them obsolete. It's a small risk, but a real one. That being said, I still believe ASML is a buy. But like with any great investment, a little humility and caution never hurt. And if ASML ever tanks because some new magic tech makes it obsolete, I can already hear Warren's voice in my head. I told you, you should have stayed in your circle of competence, dummy. And remember, this is not financial advice. Do your own research. And if you found this analysis helpful, hit the like, subscribe, and drop a comment on what stock we should explore next. And as always, Do not lose money and safe travels. Bye bye.